Welcome back to the Krown Crypto channel. It is a very special day today as I'm joined here by longtime friend and longtime guest, Fibbo Swanee, which everyone is very, very excited for, myself included. We're going to be going over lower term time frame ideas and then also going all the way up to the macro ideas as well. Carrying on with this long-term thread that we've been looking at for Bitcoin. And from here, I just want Swanee to take it away. I want you to do your damn thing. And I'm going to sit back and just watch and enjoy.
All right. Thanks, Krown, for having me again. Yeah, I've had a few DMs saying, "Hey, when are we going to talk again?" So let's do this.
Let's do it, baby.
Yeah, I'm going to start out on the hourly and work our way up to the monthly, and I got a couple other charts in there just to kind of show kind of that macro look that we're kind of looking at. Starting off on the hourly. Believe it or not, we've actually been in the bull zone on the hourly for a while now. And it did not break down here on that last little dip before we headed higher. So this has been a nice trade. You would have bought once. Actually, if you brought the things back down, you would have bought once, twice, maybe 3 times while you're in here, based on hitting the shallow fibs. And then we just had this run to the upside. So depending on how many longs you had, you could have taken profit at the 100% level. And then again, we just got hit yesterday, or maybe the day before, in the fib extension zone off the thresholds here. So there would have been another profit there. Now what we're going to be looking at is a dip back down to the shallow fib, which is now at 62,816. So, and if it gets down to that point, that's going to be where, my next long will be. The other thing that you could have done, and, this is a little bit more risky, if you didn't have any positions on after you sold out, 3 consecutive settles above the 141%, which we did have. It does open up that target to the 200% at 70,616. So if you did that's where the next target is, or it could come back down to the shallow fib, and then we can fill a long there, and then this target would still come into play since we had those 3 settles there. Now, if it goes into the bear zone, then of course this all negates, and then go back to the drawing board. But right now everything's working pretty well on the patterns here for the hourly. So I won't spend much more time on that. Let's go on to the 4-hour. What we've seen here, looking pretty decent, and I like to see the pattern that we're in at the moment. What we had back here was we had this bull zone that came into play, but when this went into play here, we'd actually be looking at, I don't know if I can pull this off or not. Oh, wrong one. Yeah, I won't move it. This previous shallow fib was at a different level when we were at this point. In other words, it did not break this previous shallow fib area when it went into the bull zone. So it really technically maintained the bullish trend. And then even though, or as it went into the bullish zone here, we had a target that hit, and I bought at 56.6 based on the fib extension off of the previous threshold. That's where my target is to buy while we're in the bear zone. And then there was another target down here at the 200% that never hit, so I never got filled there. So I got filled at 56.6, and then we went into the bull zone, and it wasn't a buy right away because we needed to see 3 consecutive settles above this previous shallow fib, which took a little bit to get, and unfortunately it cooked out on us, and we bought around this area, but now we've actually hit the target in the fib zone to take profit from this buy back here. And then we're still long with the 70,894 as a target. I will add more at the shallow fib at 62.8 if it drops back down to that point, or if we get 3 consecutive settles above 65,797 on the 4-hour basis. So it's whatever one hits first. I don't want to do both. I don't want to buy there and then it comes back down to the shallow fib and I buy more, because that's getting too exposed for the run that we're in if that type of scenario happens. I'd rather buy the 3 settles above 141% with it not dipping down I'd rather do that than the shallow fib because to me that's a more bullish. I'd be more comfortable buying it that way versus the shallow fib. But that's the way I kind of, because a lot of people ask like, well, what if it never comes down to the shallow fib? That's how we get entered in to continue trend, even though we took the profit here and it held on this area. So it's most likely going to correct back down to that 62.8. If it doesn't, then that's when we want to get back in and continue to have some exposure in case this thing just rockets on out of here.
Nothing wrong with buying high and selling higher.
Yeah, exactly. So that's kind of where we're at on the 4 hour. Everything looked good. I wish I would have got this filled down here, but I don't want to be too greedy because it's actually working pretty well on that. So bull zone still maintaining. The ADX is at 39 and kind of flat for the green positive directional index, which is for the bulls. So to me, the bullish structure is there. So any dips into this market, I think we're going to find some buying interest, and we'll find it around that shallow fib area most likely. If not, maybe it goes all the way back down to the 60,811 at the 61.8% level if it wants to correct back a little bit further. But even if it does that, even if it comes all the way back down to that point at 68.11, down here it's 68.50, which is pretty close to that number to where it would go into the bear zone. So that would be support on the RSI. That would be support on the price chart. So that would be a really good spot to buy. And then if it goes into the bear zone, then you'll end up getting stopped out. So that small, the small loss versus those large gains that the trend gives. But those are a couple areas to watch. And a lot of people say, well, why don't you just wait for the 61.8% to buy? Well, my system, when I look back and I kind of created this thing, when you look back historically, it's actually better to just keep buying the shallow fib versus waiting for the 61.8% level. Because a lot of times you're going to dip down and you're going to get in between there. And a lot of times you're not going to hit the 61.8%. So by buying the shallow fib without it retracing all the way back, that's actually a kind of a better bullish picture. And I think that's why the system works pretty decent.
That's actually really interesting that you say that. I don't mean to cut you off too much here, but I'm just curious if you kind of notice the same thing that I have. But basically, when I see pullbacks to the 38.2 level, generally in a trend, and assuming that lows do hold there, that's a signal of strength. Like coming down further is not obviously a signal of strength. So that's why theoretically it would actually make more sense.
Yeah. And when I did all my back testing, it actually worked out that way. When you look at it from a long-term basis, now you're going to have times when that doesn't work. But when you look at it from, a 3 to 5 year period and long-term looking at it, you see that 38.2 is that level to really watch, at least from what I look at. And not to say that 61.8% doesn't matter. It definitely does. It's just different ways of looking at things and different systems would work better using that. So
yeah, I mean,
that's where that shallow fib kind of comes from, or that title that I gave it, because it is kind of shallow versus the rest of them, that kind of thing. But that's where I'm at on the 4 hour. So everything's still bullish structure on this one too, which I like. Everything I like when all the time frames are going bull, right? And that's a good thing, and that's what we've been kind of waiting for. I think the last time we talked, we were talking about that weekly, and I'll show you here in a minute, but that weekly definitely held and kept us in that bullish structure, and we'll get there here in a second. But let's look at the daily. The daily was worked out pretty decent too. When we went into the bull, actually, we just went into the bull zone a couple days ago, and we were already, there was 1, 2, we were already on the third day on above this previous shallow fib here. So there's 1, 2, and then the third one. So once that went into the bull, it was a buy, basically right where we're at on price. And then it went up, came back down and touched the shallow fib, and I actually bought more at the shallow fib, which was at
beautiful.
Where was it? 63,595. So basically I'm long those two at the moment, but I'm also long from hitting this target back here on the extension. This 141% on this previous bull zone back here. when you take this threshold, the extension there with this, I kind of looked at this low in here as that tied into this 141% at 56,877, and I had a limit order there to hit the target, and it did, and it went down, but we never had 3 consecutive settles. We definitely had a couple, but they weren't consecutive. So to me, that still maintains support. So that buy, and then the other 2 buys, I'm long 30%, and then and 10% will be taken at each one of these take profit targets. With the first one being the 100% at 67,322, and then the next target I have at this high that comes inside this extension, which is right around 71.9, and then at 81.1 is the target above, which is the 200%. If this trend wants to continue to the upside, I also got this trend line on here with the trend line break, which I'm going to show you on a couple other charts where these kind of come into play. But you always take the lowest point to the trend line and take that same rate of change, and that kind of gives us a target pretty close up here. And that's typically a minimum to where things would break out. It's not to where it would end and reverse. It's just more of a minimum target if you want to trade that like trend line break. Some people like to trade those, and I like to have that measurement as a area to kind of watch for. But right now, shallow fibs at 64. If it gets back down there, I'll add some more and just kind of keep pressing it. And hopefully we'll keep this trend going. And everything's looking pretty decent. We have the crossover here, and the momentum is with the bulls. So even on the daily here, we're still seeing, buying interest coming in on these dips, which is exactly what we want. And another thing is if we come all the way back down to the trend line down in this area, the daily stays bull all the way down to 56.9. So you can get all the way down into this area if it really wants to retrace all the way back, and still maintain that bull zone. Not that I think that's going to happen. I think there's going to be a lot of buying interest before it even gets down to that area, based on these charts that I'm going to show you here in a second. But that's where I'm at on the daily. So everything, hourly, 4-hour, daily, everything looking supportive to the market. So I've went from the last few weeks being cautiously optimistic to a little bit more optimistic because the way the structure is kind of being built here, it's giving me a little bit more confidence that the low is likely in, and we're going to kind of continue up from there. Doesn't mean that we can't retrace back and test some of these lows, but right now I think this low that we had down on this wick right here could definitely be a spot to give us a reversal, because the way I look at things on the fib levels is when the 127 to 141 comes down and gets tested, that's the main area that you should look for a reversal of trend. That's the main area I look at for a reversal. Now, if this would have broke down, and had 3 consecutive settles, then you'd be out, and then you'd be looking down here in the low 50s to get back in, possibly. That's why I had this as a target. I was going to buy more if it actually came down here while we're in the bear zone, but so far we didn't. And we had a nice little divergence from this low. I know you do it from bodies, but if you look from that low to that low on here, you got a little bit of a divergence there. So that's a nice little signal that this low has a higher probability of being in. And that's really what we kind of want to look at there. So let's go on to the some interesting stuff as we go into the weekly here. When you look at my weekly chart, I got the bull and bear zones down in here, and we had this retracement back exactly to the 38.2% level, which bounced right off of it. In the last couple of weeks, we've been back to the upside. And again, this was the area that you look at for a possible reversal, but this one went up, had 3 settles above it. So that 79,706 is still kind of that minimum target to kind of see as an area to kind of take profit here on the weekly. So that's that level to watch there. So I like that at the 38.2% level tested really nicely, and that comes from my threshold here. When we went into the bull zone, I'm starting my fib at this point, and as you can see, that shallow fib held nicely. A lot of other things on here. There's a thing I do just to kind of give me a guide. I have this ABC down here on the RSI, and then I have the ABC here. Whenever you have like a kind of a positive divergence, so in other words, when this A was making a low here, and then this came down and only hit the shallow fib, and this held the bull zone, that to me is kind of a positive divergence. And what I like to do is I take the close of the A and the close of B and the close of C, and I put it in this formula of B minus A plus whatever C is. And that kind of gives us that minimum target of 98,366. So what we should be looking at here is if this holds and this is the low, we should be moving up to that point as a minimum. So and another thing I noticed was when you look at this low that we had, and we had kind of had this first wave here up to the upside, and we had the high, and we worked our way down. That was 42 bars from the low to low. And then from that low back, it was 12 bars from the high when it went into the low here. And then we had another leg was 24 or 42. And then we went back there to that high. And then if you do the same thing, 42 periods, which would be 42 weeks, would give us that next low in April or so of 25. Because this is a low to low to low. So this is a possible low in here. But the other one would be if you go 12 bars back, the high is going to happen, 12 weeks before it kind of works its way down. Because we had this little period of consolidation or correction here, which basically is almost like a flat kind of pattern in here if you look at it as like a 1, a 2, and then you got this 3 and then a 4, this little zigzaggy kind of thing. I don't have them marked, but I'm just eyeballing it. And then we'd have this next leg to the upside here. So what I was kind of looking at here was if you take just like a little forecasting kind of tool here, whatever you want to use, and go from here to here to the high. Oh, missed the high there. There we go. And just kind of move this over, because you're going to look at this area here as the same length, since this is a nice long third wave. If you take this and you look at it from here, it kind of marks off pretty nicely of where we want that timing, which would be the minimum of 98, but you're looking at all the way up to about 120 or so. And I'll show you that on another chart. But that's what I'm kind of looking at here, is just this nice little symmetry that's happening. So not that it's exactly going to happen that way, but it's definitely a nice guide to watch as you go forward. So and I have a lot more analysis, but I just try to put it in one picture. But we had this same thing here when you go up to this point and you come back down and you hold the shallow fib, which was right there at 25.5, and that's when that bull zone held there. And then you had that same thing happen on this one where it's holding basically at the same level. And that's why I like that formula that I like to use, just to give me a guide of where things could happen on a minimum. So that's what I'm kind of looking at on this chart, is just that symmetry that's happening in this wave, this impulse wave to the upside. So basically you're looking at where we're at today. If this low holds, and everything would be negated on my long bullish structure, is if we get 3 consecutive settles underneath the shallow fib on the weekly. So in other words, it's at 53,499. I think that's where it's at. Yeah, I think that's that number. What do I have in here is messing it up. Yeah, that's right. So just say 54. So right at 54, we get 3 consecutive weekly settlements. So it has to be 3 weeks because it's a very long term. That would be my line in the sand that say, hey, the bullish structure is broken down. We don't want to be long anymore, that kind of thing. But for now, with it holding, I'm definitely long. And, the weekly was a buy right here on the shallow fib. We had the buys on the daily. So we want to ride that exposure to the upside. So that's really what I'm kind of watching. So as long as this low holds, I'm looking at minimum of 99 with a possible 120-ish, maybe 125 by January of 25. So I mean, you're looking at the rest of this year and then that first month, and then we would work our way down into a low into April of 25, which would just be a correction, just like we saw off these other ones. So if this actually goes to the upside and we move our fibs, just say it goes up to the minimum of this 98,366, then the 38.2% levels at 68.7. But even if you go all the way back down to the 61.8% level, it stays kind of above, or it stays within this possible line in the sand. And if it pushes all the way up to the 120-ish area, which I'm going to show is the area that I actually kind of like better, is this 120 area. That 61.8% will keep us above this low that we had. So anywhere in this area here, I think this is where it's kind of saying, hey, this is kind of that next area that could kind of hold and not ever go back below it for a while. Not to say that it can't, and that's why you have the stops if it has 3 weeks back below.
Be careful with absolutes on the internet.
Don't be absolute. Absolutely, for sure. But that's why you have stops in there, and you stick to your system,
of course.
Or if you have a system, you should have one. And then if it says, hey, you need to be getting out, you need to get out. But right now it's looking good. So that's where I'm kind of at on this one. Looking at the weekly here, I just thought that symmetry was kind of cool.
That was very interesting.
It doesn't happen all the time, but it's just kind of fun to watch. But it's also a nice guide too, and that's why I kind of looked at it as a timing guide.
Well, to be fair, we've seen stuff like this in the past from cycle to cycle, actually. So to look inside the cycle makes total sense. I mean, it should be a fractal relationship with each other, anyways. So theoretically, I think that does kind of check out. Actually, I'm very curious to see how this works out, because to me, this lines up with the sort of timing that I have in my mind for this current cycle. But yeah. I want you to get back into it. I don't want to derail any sort of conversation.
No, that's fine. A lot of times I'll use the time cycles, and you can look at it this way too.
Right.
Just so you can see the low to low to low. I just thought that was kind of messy, so I thought I went with the 42 bars here, so you can kind of see the 42, 12, and that kind of thing. Let's move on to. Oh, actually, I had this weekly, but one thing that I also did was I flipped the chart. If you flip this weekly, it's bearish as fuck. I'm just kidding.
Goddamn right.
No, it definitely is. And like when you look at this, and one of the reasons I talked about the trend line before, I wanted to look at all the trend lines that I had on here that I kind of follow. Like we had this low to high here, so we had this blue trend line right here that broke to the upside, and you take that same rate of change and went right up to where it hit, and then you had this red trend line here, where this. If you look at the red arrow from the high here, right at this point, the red arrow here breaks here, and it comes down to the 61.8% level. This black one right here came down to the 38.2% level. So if you're actually trading this, you hit this one right here, and of course the 61.8% level hit right here, came back up and then broke, which now becomes a pretty key resistance level, or going the opposite way, and then we had this green one from my threshold, which I don't have all the numbers down here, but this is where this trend line would be. And then it broke, then this low here, and then it broke at this point. Then you take the green one, and the green one actually came down to this point right here, which we kind of found all that support and buying interest, which was right around that 69,000. We definitely went above it a few times, but we never had 3 consecutive weekly settlements underneath this. But it's heading that direction. But a couple of other areas that I like to see is, first of all, this will be the first area if it breaks this 83 to 91,000 area on the weekly. That would be the first area that I would possibly consider a reversal, because that's that extension. So if it breaks down in here, if you look at it as a bearish chart, you break this would be the extensive before it would head back to the upside. But if it goes down to the 200%, if this ends up breaking, that's where the 122,000 comes into play here, which would also bring in. I put a trend-based extension off of this leg, and then if this high holds, which is the low on the weekly here, which is this right here, if that holds, then this trend-based extension gives us a target of 102 for the 100%. But then the extension off of this right in this point, the 141% level matches the 200%. And these are things that I like to see, is that confluence between two different patterns that kind of come out, and the fibs kind of match up on these levels that I like to watch. And if that, so to me, that 122 is kind of that target that I want to see as a high come January of 25. So that's what we're going to kind of watch going this direction. And then, of course, this first trend line here of these two highs will be that this is kind of our resistance guide going here. And then if this ends up breaking, this is basically the longest distance to the trend line so far. This could go way down here and get us a further line. But if this actually stayed at a low and this kind of works its way down and trades or whatever, what I did was I kind of looked at if this moves down and then it finally breaks, that distance would bring this trend line into play for my threshold to where it would play out right here. And this comes to be at April of 25 for that low. So not to say that it would go all the way to 57, where this is at, but if this kind of comes all the way out to this 122 area, come January of 25, like we saw on that chart, then the low could bring us all the way back down to this trend line here, which would bring us into this 83.91 as support. And maybe it retraces all the way back down to this area. But what I was saying is this is going to be my guide of resistance going forward on this chart. And of course, if this breaks any time, this is going to give us, different targets. I just put it in here where it first kind of matched up to where it would hit this trend line. But then that wouldn't break this trend line until like 93 or so. In other words, this is looking pretty bearish when you kind of flip the chart and look at it from a different perspective. Let's go on to I showed this 21-day the last time, or maybe 2 times ago, but I had some other things that I kind of found that I kind of like on here. Lot on here. Let me just go one at a time. First of all, each one of these trend lines, if you take the trend line break to take the same rate of change from the trend line break to the point, you can see it's kind of hard to see here, but the high hit this perfectly right here. And then it worked its way down, hit the 61.8% level before heading higher. And the same thing here on this one. You broke, went right up, hit exactly on the target, came back down, hit the 61.8% level, and then rallied higher. On this one was a little different. It definitely hit you take the furthest point to the trend line, the same on the break. It definitely hit the target, but this one actually came down, broke the 61.8% and went all the way back down to a full retracement off the break right at that point, and then started heading higher. So, this one held at 61.8%. This one held at 61.8%.
Right. But if you look at this third one here, you did have a bit of a black swan there. And if you were to kind of look at like the end of month closure, that was, I believe, around the 61.8 level, which is probably where price would have been if that didn't happen, blah, 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 blah. Maybe we don't actually know, but it kind of makes sense.
Yep. No, I see what you're saying. Yeah, just take the wick out of play, and it definitely came back up. Yep, exactly. In other words, we didn't have 3 consecutive settles, which I like to see for any breaks. So that was definitely a move back up. Now, if you look at where we're at right now, we had that rate of change and the trend line break already hit the target, and it's worked its way down. Now, the 61.8% level on this is right around 45, which we never really got to yet. But not to say that it will go to the 61.8% level, but so far we're holding that 38.2, which I actually like better as a better structure hold, or a better,
stronger trend for sure.
Yeah, a stronger trend, or at least more buying interest coming into the market on dips. That's what I like to see. So when I look at all these different trend line breaks, then what I want to look at is when this did retrace back down to the 61.8% level, I looked down here at the ADX, and as you can see, the positive directional index never crossed the red, and it maintained bullish structure when it was coming down to test this. So this never really went bearish. So that was a sign that the momentum was there. So buying interest should have been found before it headed higher, And that's exactly what happened. But then we go to this one, and then the 61.8% was being tested. This one actually crossed a little bit. So that's where that wick came down and gave us that cross. But then, like you said, it came back up to the 61.8% level. Then it crossed back pretty quickly and then led us off into bullishness again. So now if we look at where we're at today, same kind of thing. We're down here to where the green positive has not crossed. With the ADX coming down, actually it was coming down as the price was actually on the red here, as the red was starting to increase, or the negative directional index. So the bears weren't really building any momentum. Now the bulls were losing momentum also, but so far we haven't had any crossover. So if you look back at these scenarios here, if we don't get a crossover and that momentum continues to stay elevated like this on the ADX, which is, pretty high, not that we can't see a little bit more of a correction, but as long as we're getting this, that's a sign of support to where we can move higher. So that's what I was kind of looking at on those levels on that point. A couple other things. I had this little double top right here. If you take the distance from the double to this low, and then when that broke, it's kind of hard to see, but you get these little black arrows here. It actually worked its way down perfectly on that and found buying interest before popping higher and then breaking the trend line. So that was actually pretty nice. The other things I have are just the amount that the price moved underneath this moving average, which is the 55, which is a fib number. This was down 44% underneath the line. This one was 33, and then this one came down to be about 46. So I kind of like to look at that sometimes. But right now we've flipped back above the 55, and now this is going to be our support guide going forward. So if we ever break this moving average to the downside, most likely we can look at something, somewhere between 33 and 45, somewhere around there, with a possible correction. But that could be a while before we break this moving average if we continue this trend to the upside like we're expecting. And then the other thing I did on here, it wasn't perfect, but I just trying to figure out some guidelines, is I put from the break of the trend line to where that next low was before the next break. So you had this move up and the correction back to the low. It was 65 bars here. It was 56 here, and then 64. So what I did was, if you just take the same here at this point, I took the 56 and the 6, or this one was the longest at 65. This was the shortest. So what I did was I just put the shortest and the longest zone here. So in other words, these lows should come in around this point, and then the highs up here, 35, 38, 36. I did the same thing. Well, actually, this should be 35, but you get the gist. This is where your highs would be. So if you put a high in here, you're looking at possibly, this one's showing like a March of 25. So maybe it's a little bit earlier on that January, or maybe March. So I'm looking at just different time frames at different patterns to see if it kind of matches up with that January high to April correction, possibly for next year. It's not perfect, but that's just some things I was kind of watching on this chart too. And another thing, these red fibs. So once we had this hold on support here, and it broke to the upside, it went above the 200%. It came back down and tested, and then went even higher. Same thing here. Once we went above this 200% here at this point, it retraced back and never went back below it. And then also on this one, came up, tested, and that's where I brought that double top into play. Since that broke the 200%, it came back down and then worked its way back up off of that small little, I don't know if it's actually a double top, but you know what I mean when it comes to that little pattern there. But then this one is that 122 that we were talking about on those other targets, is the 200%. So this actually, if it kind of want to work the way it did these last few times, except for this one, because it never got to the 200% yet. Once it gets to the 200% and gets above it, then the 200% should become the level as like support going forward. I know this is pretty bullish, but But if it's going to hold these patterns that we've seen from all these different corrections to a new break into new trends, we're looking at that 122 as a minimum. But if it goes above it, then that 122 could be a support going forward. So we'll have to see. As you can see, I'm pretty bullish this market, at least from the technical side, because I give absolutely two shits about what's happening in the news and everything else that's happening everywhere else. I just look at the patterns, and if the patterns are going to continue to hold, that's my indication that this is going. Now, whatever news is happening, I don't care. The indicators will let me know what news actually changes the psychology of the market. And so far, the psychology of the market's still up. And it's taking a little while to get there. That's why you got to have patience. But we're getting there. Now we flip on to the monthly. Monthly here, the only thing I was looking at here was just some of these breaks, just looking at some of these areas. But like 61.8% level broke. We had the 69,000 area as your full retracement. We traded up a couple months above it, and then we started to retrace back. But what I'm looking at is that confluence on the fibs, like I saw before, or we just talked about before. The high here down to the low, the extension here is 83 to 91, and we saw that on a previous chart. And that's that kind of area to watch for a possible reversal. Not that it can't break it, and then we go to the 122. If that 91 breaks with 3 week, this would be 3 monthly, but the weekly would do the same thing to give us that possible move to the upside. But when you take this, you kind of look like we talked about before on the where are we here on like a little forecasty thing. Go on just like we did before. We had this low to high. If you take that same thing of where we're at on the low here, you're working your way up. Probably not the best there, but you get the gist. You start at the low and you work your way back up to this point, and that could be a target to watch. But I'm really kind of watching the fibs here. The extension here, the minimum on here at the 127% is at 83.5. But when you take this third leg and then you take a trend-based extension like we looked at on the weekly, and you work your way up, the 61.8% level matches this nicely here. So that could be kind of that first point that you find some resistance, and then you work back down to support. So if this goes up to the freaking magnet piece of shit. All right, if this goes up to that level right there, then the 38.2% level becomes at 57.5, which as you can see here is a pretty good support level. If it wants to correct all the way back there once it hits the 83. But then going even further, let me try to get this fib back to where it was, where it should be. Dang it. There we go. So this is kind of matching up here. Well, it's off just a little bit, but because this actually should be tied in at the 200% at the 122, which is the 141 on the extension for a possible reversal. So basically you would have 83 back down and then a move up to 122 and then maybe a correction, then maybe even further when it comes to the monthly. But I'm just looking for confluence between some different fibs, that kind of thing. And then the last chart is also the monthly, but I just wanted to show the trend line breaks on the monthly working really well too. Furthest point from the trend line, same rate of change, matches there. And then you had the break to the downside here, taking the same rate of change, matched up really nicely here on this. So if you're trading that, you'd have a nice little move back down here, get bought, you break to the upside. Then this one hit at this point, and then this trend line break here is where that support is on our weekly and also the monthly, where that 38.2% level comes in.
Yeah.
So to me, that is really good support off of that, just like we had support here. And then we had, well, basically once we actually went up and just broke out on this one once it got above it. But I like this support that's off of this move here. Just to have fun with all these little things they have on the side here. You could, if you look at this as a 1, 2, 3, and then this 4 didn't break the 1 here. So if you just look at that kind of pattern, you're looking at, something like, whoa. Oh, that's not right. I meant to start at the 1. So if you go, I don't know if this will work on a monthly, but we'll find out. Oh, there we go. Drawing with Fibbo. There we go. So if this actually holds here off of this low, just like it did on this one, no, that wouldn't be right either. I'm just pissing around right now. So we already hit on that. So we got the retracement back. We'll have to do a different analysis on that to figure out where that would go. I thought that would work, but I guess not. All right. Main gist on this one was the trend line breaks and this holding a support. And again, this is the same kind of thing that we saw on the weekly. If this support holds, then we're looking at upside, and we can go from there. And that's the monthly. So this is where it was kind of showing the movements to the upside, but this was just where I wanted to show the trend line breaks, which is a very interesting tool, by the way. Not that you need to trade off them exactly, but I use them as guides. You'd be surprised. Pull up different charts and just look back at history and just draw some trend lines. Now, not every trend line matters. These trend lines are based off of when the psychology changes on the RSIs. I don't have them on here just to have a cleaner picture, but I have them out until about the weekly, and then it gets too messy on the monthlies. But when you look back on on a lot of these trend lines, just kind of take a look at some of these on how easily they hit targets on these, and a lot of times they're minimums. This one actually retraced all the way back before heading higher, and then this was a minimum here. But a lot of times you'll get a minimum, and then it actually goes down to some kind of extension on a fib or those kind of things. So I wonder what this looked like here on this one. Yeah, I broke the 61.8% level, but that's about it, man. That's what I had for BTC.
I love it, man. I fucking love it. I love this continuation of the long-term thread. Last time you were on here, it's a little bit more cautious. Now it's like, okay, it's game on.
Yeah. Now it's game on. Yeah.
And I'm pretty much of the same opinion. I'm waiting for one more thing, but it's probably more of a formality. For me, we'll end on this statement, because this is one of the big things that was coming up in my mind. I didn't want to stop you too much in the moment, but so one of the things that I've really been considering for this current cycle is that I do think that Bitcoin is going to see the cycle high in no later than Q1 of the coming year, probably even end of this year. I wouldn't be surprised to see Bitcoin go into a prolonged consolidation. And so I'm curious what your sort of thoughts are on that. Like, it seems that you're maybe a little bit more agnostic as to the cycle continuing from there or not. But yeah, I guess I'll just ask you straight up, what do you think?
No, I like that. What you're looking at is kind of that first quarter. If I'm looking at a January of 25 possibility as a high, and then April correction. But when I looked at a couple other charts that I don't have on here, I actually saw a couple other patterns that could push us almost to 130-ish to 150-ish range. And then that 122 would become support.
Yeah.
But for me, if that 122 gets hit in January and then it starts to retrace back, I think that would be kind of it for the cycle.
Yeah.
And then we would go into a period of boringness, and then people would get all pissed off because we're only at 100,000 and it should be 200,000. But I can see a scenario where once this happens, we could go into a long period of consolidation, and I think the reason for that would be just the adoption that's happening out there. We get more people into the market, then the market becomes a lot more stable. Maybe
it'd be slower.
Slower, and I think that could lead to a little bit more consolidation going forward. But the main thing is the timing of this. If you're looking at different things and you got a first quarter possible high, I like that my fib levels from where I take my fibs off the thresholds are also getting that timing. So
yeah, man. I mean, not only do we have very close similar timing, but target, I've had 120 for a while, 111 to 1, or sorry, 108 to 120 is
awesome.
are the like the big areas that I'm looking for. So I mean, all of that sounds good to me, man. But,
No, it sounds great. Let's see if it happens.
Exactly.
But again, you know, when we're looking at charts and we're doing the trading, let the market come to you. Don't you jump the market. Like don't go out and just buy just because we're bullish or other people are bullish out on Twitter.
Blasphemy.
Stick to your plan, and if the plan's working and you're buying at the right levels, let the market come to you, not the other way around. Because
of course, all of these ideas have invalidation points anyways.
Yes,
so
yeah, and that's exactly what I was trying to get at. Yeah,
but so far so good.
Yes, yeah, and like you said, there's boxes that you check off to get. For me, getting from cautiously optimistic to a little bit more optimistic, a lot of boxes have checked for me. So I feel a lot more confident in the hold here. So that's why I'm buying. But then again, if I buy down here and I get invalidated on the weekly there, I'll take my loss and my lickings, but that's just the way it goes. Trading. But if it doesn't and it holds, cha-ching.
Yeah, hell yeah, man. I think that's probably a good note to end this one on. Right. I want to let everyone know who's watching. Check out Fibo Swanee. He's very prolific on Twitter, TradingView, and he has his own website as well. I'll link all of these in the description below. As always, Swanee, thank you so much for joining us, man. It's an absolute pleasure, and we look forward to seeing you again soon.
All right, man. Thanks, Krown. Take care, man.
All right, man. Take care, brother.